and welcome to Price Action GPS. I'm the Market Surfer here with your morning report for September 6th, 2023. All right, everybody, summer's over. That went pretty fast. I'm going to go over the charts real quick. The deep dive I'm going to go into is your 401k. So everyone keeps wondering when the stock market will falter or start losing its steam. I mean, it kind of has momentum-wise, but the price continues to go up. And I would like to say it's this. More employees or more employers put 401k savings on autopilot. About 62% of businesses with 401k automatically enroll workers in the retirement plan, according to Plan Sponsor Council of America. In 2020 was the first year employers most commonly used a 6% deferral rate rather than 3%. You see how this is? Before COVID, they started changing these rules. Then COVID happened. No one pays attention to how much money they're probably getting taken out of their check. How many people do you think are automatically enrolled in 401k and are contributing to the economy and don't even realize it? So once these numbers tick up, the unemployment numbers tick up, I think that affects the stock market severely. Because if BlackRock, Vanguard, and whoever else, or maybe it's BlackRock, Vanguard, and maybe Blackstone are the largest fund or funds in the world, and I believe at least they own like 8% of the top S&P 500 companies. So they do move markets, but if they don't have the coffers to buy the stocks every month, that's where I think it turns down. So about 62% of Americans with 401 use automatic enrollment. See, automatic enrollment goes up 1% a year. I think it caps out at 10%. So I just think 3% just doesn't get us anywhere we need to be for the long run. So it's just a way for them to convince you, or at least back then it was, explaining why everything was so good. So I will obviously keep this in the show notes. So I wanted to show you that. I wanted to go back to most self-sufficient economies in the world. I'll put this in the show notes too, but for the sake of time, I will just go over what I deem important. For example, the United States, with a $21 trillion economy, is considered among the most self-reliant in the world, even if the value of its imports made up 13% of its GDP in 2020, compared to about 10% from its exports that same year. Find out if the U.S. ranks among countries where people has. Well, the other thing is once we start drilling, and well, I think drilling is the easiest way to get people back to work, and cheap gas, and just slightly lower interest rates. I think that would spur something, but unfortunately, I think it's kind of like the beginning of the end. We have to see how we make it through to December and into next spring, and that's where it matters. So we could still hit this 32 mark on Bitcoin. That would make sense. It would be the triple top here. If that's the case, we may hold right here, 20,000. Anything below 20,000, we're probably going down at 14. Dollar index, still staying strong. Momentum's still kind of there. I'd imagine the top would be 105.645, around that area if we're going to close that gap. Dollar yen, man, this has been yen continues. Well, it's not that it's getting stronger, it's just relative value to the dollar. So Bank of Japan and America are in similar situations, but different time frames. They have the same. We're beginning to have the same problem they had in the 90s, and I don't think they're coming out of it. I think it's a generational thing. It'll take 30 years for their culture and their demographics to catch up with one another. I don't care about the banking sector right now. Moves going up. U.S. 10-year just broke new highs right there. That should be the sell-off where momentum's under. We're under the yellow line on the RSI. But this momentum on the woodies is still pushing to the top. Here we go. Still waiting for that 116. We get down to that 116. This level should hold, and it should change interest rates. A lot should happen when that hits 116. And look, this gapped up yesterday, the 30-year. Or overnight it did. Wow. Let's go to a 4-hour. Yeah, it gapped up overnight. See where it goes. I mean, momentum's still pushing up. So this interest rate mark up here at 4.7 is still in play. 30 years, look at the nice little 5-year diagonal. Should break soon. Where is the... There we go. That already happened. So now that happened, we can... the buying frenzy would probably slap. Same thing. Momentum is on the bottom. Under the yellow on the RSI. And I would say that means the momentum is dying out. Doesn't mean it has to crash all the way down to here. Although most likely that's what's going to happen. It'll be a short down to there. 20-year Pro Shares, Russell Ultra Short. Comes down to credit again, guys. All these Russell, these guys don't have good balance sheets, and I don't mean that they're making money. If they're crushed in debt, I think the Russell 2000, the small caps may have funding issues going forward when we hit the credit crunch, even though they look like a better investment now. Amazon still holding on, man. That momentum is still going to the upside. Maybe if it's going to go down, it's going to get to the 146, and then sell off. Depends how bad this. I think there's a downturn coming within the next month. I'd say between now and the end of October. Starbucks, that short should be coming on soon. Spotify, didn't close the gap yet, but that was the trade. That bottom there over the moving averages right there to the gap. We're almost at the gap. PayPal, same thing, but I think we're going to pen it here and pop out of that real strong. Same thing with Generac. Apple, on the other hand, close that gap and then probably come down here to the 600 period moving average. Haynes brand, see where we find some support. Sorry, I got it on the hour chart. Let me go to a daily. If we hold this support here, that would be the nice buy spot. Try to close that gap. I don't know if that's going to happen right now. Maybe this needs to cool off. Drixon small cap. This is another thing. These are the same ones. They're having funding issues. All right, we're running short on time. This is for you, Sean. Here we go. You sent me this the other day on No Agenda Social. Look, once it goes over the moving averages, it's in play. You see that? Once this was riding along those moving averages, it's in play. And if you were worried about losing money, see that gap right there? See how it closed it? There's little trigger points that should tell you to get in, but that was the best price, but this was best entry over here. And now it goes right up to resistance. Should sell off, but if it's going to hold, it'll stay above this waterline. So as long as it's above that waterline, I would probably stay in it. Well, let's see how many shares traded today. 840. That's over 500,000 a day. So I like 1 million, but 500,000 is kind of the rule of thumb. And that's it, everybody. This is a value for value endeavor. Rather for me going through the long, blown out thing. Thank everyone for subscribing, paying attention. Give me a thumbs up, response, comments. This is value for value. If you're watching this on No Agenda 2, please donate through the boostergram right there on No Agenda 2. You can always download it. Download any new podcast app at podcastapps.com. CurioCaster and Podverse do great for video, so they would always be the one. Sooner or later, I'm going to do price action, how-tos and strategies and tactics, and I'll only be putting that on the value for value. Probably No Agenda, and as a podcast as well. So thanks, everybody, again. Talk to you soon. Stay safe and effective.